This scam sold trading signals and courses that promised fast profits while quietly extracting millions from followers worldwide. Across the US, UK, Europe, and Asia, self-proclaimed trading gurus built large audiences on social media platforms. They showcased luxury lifestyles, winning trades, and screenshots that appeared to prove consistent success. Followers were invited into private groups where exclusive signals were shared for a subscription fee. The promise was simple: copy the trades and make money without needing experience. In many cases, losses were hidden, while only winning trades were displayed publicly. Reports linked some of these operations to coordinated networks using identical scripts and marketing tactics. What looked like financial education was often a structured system designed to convert trust into recurring payments. As online trading platforms became widely accessible, millions of new retail investors entered the market. At the same time, social media created a new category of financial influencers with large, engaged audiences. Platforms like Instagram, Telegram, and YouTube became primary channels for sharing trading content. Many viewers had limited financial knowledge but strong interest in quick returns. This created demand for simplified strategies that promised results without deep understanding. In several cases across the US and Europe, users followed influencers purely based on perceived lifestyle success. The line between education and promotion became increasingly blurred. This environment allowed unverified individuals to position themselves as trusted trading experts. The scam typically began with highly polished social media profiles presenting a consistent image of success. Posts showed luxury cars, travel, and screenshots of profitable trades to establish credibility. Short videos explained basic trading concepts to attract beginners and build initial trust. Viewers were then directed to join private Telegram or WhatsApp groups for exclusive access. Entry into these groups often required a small fee or a trial subscription. Inside, the guru positioned themselves as a mentor with insider knowledge and daily opportunities. In multiple cases across the UK and Asia, users reported joining these groups based on referral links or influencer promotions. At this stage, the relationship shifted from passive follower to paying participant. Once inside, the system focused on delivering frequent signals that appeared actionable and time-sensitive. Trades were presented with entry points, stop-loss levels, and profit targets to create a sense of precision. Some signals were intentionally delayed or edited after the fact to show only successful outcomes. Losses were rarely documented, and losing trades were quietly ignored or reframed as minor setbacks. Members were encouraged to increase their trading size to maximize returns from high-confidence signals. Additional tiers were introduced, offering VIP signals or one-on-one mentorship at higher prices. In several reported cases, identical signals were distributed to large groups, making outcomes inconsistent across users. The structure created continuous dependence, where users relied on the guru rather than understanding the market. As profits from subscriptions grew, the model expanded across platforms and regions with minimal changes. New accounts were created to target different languages and demographics across Europe and Asia. Affiliate systems were introduced, rewarding existing members for bringing in new subscribers. Some operations launched paid courses, promising advanced strategies and long-term financial independence. In multiple cases, identical course material was reused across different brands, with slight rebranding. Influencers collaborated to cross-promote each other, creating an appearance of a larger trusted network. Reports indicated that some groups operated at scale, managing thousands of paying members simultaneously. What appeared as individual success stories was often a coordinated system designed for continuous recruitment. Over time, patterns began to appear across different trading groups and platforms. Profits were consistently highlighted, while losses were rarely shown or fully explained. Performance claims often lacked verifiable records or independent tracking. Pressure tactics were used to upgrade to higher tiers or limited-time offers. Refund requests were delayed, denied, or redirected to new services instead. Some users noticed identical trade signals appearing across multiple unrelated groups. Regulators like the Federal Trade Commission and the UK Financial Conduct Authority flagged misleading financial promotions. The common thread was not trading skill, but a system built on selective transparency and continuous monetization. As complaints increased, regulators and law enforcement began examining these trading networks more closely. The Federal Trade Commission and the UK Financial Conduct Authority issued warnings about misleading financial promotions. Europol identified cross-border groups using the same marketing funnels and payment structures. Investigators found recycled content, identical scripts, and shared admin accounts across multiple brands. Payment trails showed recurring subscription flows rather than profits from actual trading activity. In some cases, influencers were linked to undisclosed affiliate commissions tied to course sales. Platforms were pressured to remove accounts that violated financial advertising and consumer protection rules. The investigation revealed a system where revenue came from followers, not from consistent market performance. This scam showed how easily financial authority can be constructed through visibility rather than verified performance. A consistent online presence replaced audited results as the basis for trust. The system rewarded persuasion, lifestyle signaling, and frequency of content over actual trading skill. Followers were not buying strategies, they were buying confidence packaged as expertise. As long as new members continued to enter, the model sustained itself through subscriptions and upsells. The failure was not access to markets, but the absence of verification before financial decisions were made. Experts increasingly advise independent validation, risk awareness, and skepticism toward guaranteed returns. The broader lesson is clear. In open digital markets, credibility must be proven, not assumed.